I'll show you a successful 1-minute scalping strategy with step-by-step instructions on how to use it, covering topics such as how to enter and exit trades, what indicators you should use, some simple price action, multiple time frame analysis, and fundamentals. At the end of the video, I'll give you one more powerful tip that no trader uses, but they definitely should, because it would exponentially increase their profits. I can guarantee it. Okay, so without further ado, let me just grab my laptop and open up the charts. So the first thing, head over to TradingView and open up 1-minute charts. So to understand the strategy properly, first thing we're going to do is learn a little bit of price action, because that is super important and crucial before adding any other indicators to take full advantage. Listen up. Okay, so the first thing when scalping, we really want to identify key levels of area support and resistance. Some people would say supply and demand is the same. So the first key level would be a nice area of resistance just over here. Every time the market has touched this area zone, it went towards the downside. And we can do the same thing with the support. If we drag this along, we can see that every time the support has been touched, it went towards the upside. Now, this is all dandy and great. However, what else are we missing? Now, we know the market is trending towards the downside, and how can we spot it? Now, if we have a look at these candlesticks over here, it went towards the downside very nicely. And if we use this red line, we can see previous areas of sensitivity. Just over here, pullback, attempt to break, and then eventually it does with the bearish engulfing candlestick. Next area of sensitivity would be here, and we can see a nice break, an exhaustion to the previous area of sensitivity, and it went towards the downside once again. If we drag this red line one more time, we can see the previous area of sensitivity just here wasn't really respected, and it started to consolidate in between these two levels. Now, this is a simple approach, but we always want to be trading with the trend. Since the trend is towards the downside, more often than not, the trend will continue. So what we want to be waiting for is a breakout. Now, if we have a look, we just got a nice breakout towards the downside, a huge bearish engulfing candlestick. This already seems like a great trading opportunity to go short. So to set our stop loss level, we drag this along and see how many pips can we get. I believe 10 pips is good enough, because previously the candlesticks really respected this area zone. And we can see that we had 3 wicks in the same area position, and every time they touched, it went towards the downside, right? So we want to have our stop loss level above those wicks, just in case if the market pulls back, it doesn't take us out of the trade, but keeps us running. And for take profit, you want to be aiming for 1-to-1 as well in this case. Now, we can improve this later on and I'll show you, but this is the basics and we really need to grind that. Without the foundation of price action, you're not gonna be a profitable trader, I can guarantee it. So without looking at anything else, let's just see how the trade plays out. So as you can see, it's forming nice lower lows, little bit of a pullback towards the upside, and then eventually goes towards the downside and reaches our take profit. Now, this is the most simplified way to trade price action, right? A nice little breakout, bearish engulfing candlestick, as confirmation. You hold the trade for as long as possible and hopefully reach your take profit. Now, this would be considered more of a day trade rather than a scalp, because you would have been waiting for an hour to close this trading position. Now, scalping should be a little bit quicker, so that's why we can improve it with some indicators and maybe open a couple more positions to see the logic and understand how to maximize pips. So head over to the indicators section on TradingView, make sure to type moving average, and we will need 2 moving averages. So let's add them to the charts. My first moving average period is 20 and style is orange. My second moving average is 50 and style is blue. Now let's just discuss why the moving averages work so well and why you should use them. So we entered the market just here. It fell towards the downside, had a little pullback towards the 20 moving average. It went towards the downside again and made a new low. That's a good price action move for bearish movement towards the downside. However, after it touched the bottom over here, it shot towards the upside. That's quite typical. It's an exhaustion. Then the market decided to be a little bit strange. It had a little push and then another pullback towards the 20 and 50 moving averages, which is also a great spot for further bearish pressure. Now, after that, we got a bearish engulfing candlestick. This could have been a potential re-entry for this trade because the markets reached previous areas of sensitivity. So after a push, it went towards the downside. It reached the previous area of sensitivity just off here. It's in between the two moving averages. A bearish engulfing candlestick as confirmation. It should be going down, and it did, to retest the previous bottom level. That could have been a simple scalp trade that you could have made. Look at this. If we are using the price range tool, easy 4.8 pips and a very quick and profitable trade for you just to retest the bottom. Simple moving average bounce, candlestick confirmation, beautiful. However, sometimes things get tricky and we see a nice little break of the two moving averages. 50 and 20 has been broken. We can see it here at the top, and after that we get another bearish spike towards the downside, and that's a huge bearish engulfing candlestick. Now this is where the problem is. When it breaks the two moving averages and it spikes like that, you should wait, because it could be that the market is actually going to pull back a little bit more. And this is where we could use the RSI tool to check this out. So type in relative strength index, or for short RSI. And if we compare RSI against the candlesticks, we can clearly see that the market is oversold and likely there's going to be a bigger push towards the upside. The RSI lines looking like steps, they are going up while the candlesticks are going down, which means the momentum is slowing down, likely bullish pressure is incoming. And let's just see what happens. And it continues to shoot up. And you could have easily predicted that with the RSI indicator. That's why it's so important as well. Now again, look at this. Can you spot a great selling opportunity? I'm curious. We can even use our previous area of support that was broken, and it's a new resistance. So if we drag this along, of course it doesn't look right, but that's why I use the rectangle tool, because I believe an area of sensitivity is better than a simple price line, because most of the time the price has wicks and it just doesn't look as accurate. So if you use the rectangle tool and drag this to the top, everything starts to make sense. We can see that previously the area over here has been respected and went towards the downside. Now we are having a pullback, and where is it gonna go? Of course it's gonna go to the previous area of support that was broken, and now it became resistance. So we know over here there's a lot of selling pressure, right? Now let's just remove this for now to make things a little bit clearer. Why is this move over here so important? Well, we can see that the 50 and 20 moving average has already been broken. After a push, there's going to be an exhaustion, where to the previous area of sensitivity around here, or the two moving averages. And now we have two entry confirmations. One is better than the other. Can you spot it? The first entry confirmation would be around here. It's a bearish engulfing candlestick, and it recently has broken this previous area of sensitivity, right? So if we use the horizontal line tool just over here, the candlestick is very slightly lower, but that's good enough. So again, to enter, you want to put your stop loss level to around 6 pips would do, because the previous area wicks just over here are not touching the stop loss level. So even if the market decides to push towards the upside, hopefully it doesn't take us out from the trade and we can carry on selling it. Now in this trading scenario, you don't want to be trading one-to-one risk reward. You want to be trading the previous bottom level. So if we drag this along, it would be around 10 pips, let's say. So straight away it becomes from 1-to-1. Last time we took a trade to 1.67, which is a much greater risk reward. Now you can be even smarter, because there's another trading opportunity that I like, which is the shooting star just over here near the two moving averages. A nice push exhaustion scenario. It's beautiful. So if we move this along just over here, we can straight away minimize our stop loss level and increase our take profit level just slightly to maximize our pip gain this way, because we know the previous area bottom is over here. That's where we want to be aiming for our final take profit level. And obviously our stop loss is higher than the previous wicks over here, which if the market pulls back, we should be safe and able to ride the wave out. So if you really want to be picky, you can also draw the trend line over here. There's a clear trend towards the upside. However, the overall trending direction is bearish. We know that the moving averages are above the candlesticks. This should be a good enough reason to go short, and we shouldn't be scared too much, at least, of the trend line we have drawn. So now let's see what actually happens. So it does react towards the trend line. A nice little push exhaustion once again. Nice little consolidation. Let's see how the market reacts. Actually manages to break the moving averages one more time and eventually reaches our take profit level. So why was this move so predictable? And when watching this chart, you can carry on adding more information. What do I mean by that? Look, we can draw this trend line. As you can see, this has been broken now. Market has broken this trend line, started to consolidate over here, found support, right? What happens? Consolidates, boom, breaks the two moving averages. Where is it gonna go? Probably the previous area of sensitivity, somewhere around here. That's why you use the rectangle tool, right? Somewhere around here makes sense. Previous supported level many times became resistance and it went towards the downside. This would have been a great trading opportunity just off here. Once again, maybe to re-enter the trade or double down even. And then it sank towards the downside, had a little pullback once again. Where's the pullback? Previous area of sensitivity, two moving averages, and then continue to move down for our take profit level, rather than just that one breakout we did without the indicator. There's so many trading opportunities that you can use and utilize these tools to your advantage. Now, to improve your 1 minute scalping, you want to be using multiple time frames, and probably the best way for me to show you that is actually scalp on a live trading account. So as you can see, I'm on the 15-minute time frame. It just broke out the 50 moving average. This is what the 5-minute time frame looks. It's going towards the upside. It's making new highs as well, and recently we had a bullish engulfing candlestick. We can now head over to the 1 minute time frame and we can spot a nice little trend going towards the upside. Okay, so I'm gonna open one lot size. There we go. I also set up my stop loss and take profit levels. And this is what's happening. Currently, we have this area of support over here. I'm expecting a bounce of the 50 moving average. I wouldn't say there was an entry on the 1 minute time frame, but there was on the 5 and the 15. And that's why multiple time frames are super important. And straight away, as you can see, I waited a couple of minutes and we're already moving towards the upside, which is absolutely beautiful. And if we just take a look, I'm currently $8 in profit. Now, I'm only doing an example, but maybe if you're 1 minute trading, you could be closing just over here. If you want to be volume trading, maybe 20, 30 each day, and then end your trading session that way. Or you can be a day trader and wait it out. Let's say we enter this trade and we wait around 30 to an hour, but we close the position the same day to not incur overnight fees. So nicely moving towards the upside. Now, if we manage to break this previous area of resistance, a nice push exhaustion push scenario would be very, very likely, and that could potentially take this trade much further. We also have this trend over here. Just draw it out. And now we're currently on a squeeze pattern, right? So we're waiting for that resistance to be broken. We know that the price is likely going to be playing around over here until eventually it either breaks towards the upside and then we have to reanalyze and rethink our trading strategy, or it's gonna break towards the upside and then it should be smooth sailing from there. You could have obviously closed it off just here where it was $10 profit, but if you're a day trader and want to keep it running, maybe you should be looking for the higher time frame highs and lows to measure where you want to take your money, if it makes sense. So look at this. This seems pretty funny. A nice little rejection of the 50 moving average and the trend line. As I said, the market is likely going to be moving in that squeeze before it either breaks up or down. So we'll wait and see. Now, sometimes you might not know where your support and resistance is, especially if you're new. So I highly recommend using pivot points. If you use pivot points high and low, you're gonna have these little numbers over here which tells you the exact price of the pivot points, so you can then decide where you want to be placing your resistance and support levels. Another pro tip I want to mention is actually when the market consolidates like that and is not breaking the trend or is not breaking the support, all the other time frames are catching up. So as you can see, the 5-minute time frame moving averages around here is going to be a nice little protection zone for our nice bullish trade. And if it keeps on consolidating, the 50 moving average is going to come closer and closer, which is again a nice little floor for our candlesticks to hopefully then jump and bounce. So we are definitely in a squeeze at the moment, and if we manage to break past this little downtrend and this area of resistance, then it's smooth sailing. But as you can see, we have to be patient. Also, another tip. So sometimes you might think that the trend is broken, but then you move it just over here, and again we can see the wicks are bouncing off this trend, and there we go. So it's not really broken just yet. We need to break that area of resistance, and then it's all Gucci. And there we go, we finally have a new high. If we drag this along, as you can see, these were the previous highs just over here. Went down, went down, went down, and now this candlestick is slightly higher. We should have now a push exhaustion push scenario to hopefully trigger more bullish momentum and pressure, and then continue to go up. Okay, there's the exhaustion, and now we should see bullish pressure. Now, as you can see, we are getting some bullish pressure, but to really confirm this trade, you have to have a look at the 5-minute, and there is still a resistance on the 5. So a nice break on the 5-minute time frame higher than the previous candlesticks would be even better. That would 100% confirm the trade bias, and then we can go long. But this is why you use higher time frames to understand what's actually happening. We can see so many wicks in this area zone, but once we manage to break it and make a new high past these candlesticks, this is going to be the end of all sellers. And there we go, finally some bullish pressure. We're just gonna go ahead and close it off, $20. And now here's the most powerful tip that separates the advanced traders from beginners: preparation over the weekend. And if you don't know how to do that, you'll struggle to be a profitable Forex trader. However, you're lucky because I have a video just here for you to become a better and profitable Forex trader. And look at this, it keeps going up.